Welcome to TradeTheMBA.com. This is John. This report is for the 18th. I'm going to scroll through the numbers on what was a pretty nice down day. We had a lot of little things taking place. Not just the overexuberance, but like I was talking about, I posted the article I had mentioned a couple of days back where we were seeing in the algos a little bit of central bank kind of involvement in some of my macro algos, and sure enough, subsequent articles follow up that, the concern is that, maybe things are a little frothy and might need to take some action. And that comes in a variety of different ways. We usually see it from our readings in general. We had seen that we were, from back over here, within this maintaining sell configuration, we never got the buy of the steel back above, and it immediately pivoted lower. And then even though we had the rising green, now you have the pivot of it, so that means the potential for turnaround is there. We just would now need to see it again pivot up. The fact that the steel kept going lower and not moving higher means that potential as we get a little bit more negative. You can see a giant deep red candle. Haven't dipped below the red line, so all in all, indifferent by it. It's merely just a retrace of the dip below the red line over here. Not outside of our expectation on it. NQ we'd already seen was a little bit weaker, and also it already formed still a lower peak. So when it dipped down, a little more legitimate on that. And we had already seen also that YM couldn't quite get enough of a boost. You had the white move above red, and then immediately we opened up and boom, they both ticked lower along with the steel dipping below sign, which is always the triple sign. And that became exacerbated because we actually had a little bit of up movement early on, but it quickly degenerated and fell apart. In fact, I could put the 5K real quick from the ES. And we can see how it just, you were doing okay, and then boom, started to slide. Some people will say, well, it was related to the jetliner getting attacked, this and that with the Israelis. All in all, quite a few different options within there. We knew back here when we saw the deep red that we were going to retrace this level, and there was no shock with that when it came through. And then when we started, it took the initial buy off this one. I thought that was a little premature from it, but that's okay. It takes away equity highs from the 50K, but just a single entry there. What we're going to be looking for now is we have the lower pivot here, and we also have a higher pivot, so easy enough to see when that turns around. And we're going to dip below the red line, so the potential for any kind of pop in this is going to take a little bit of effort because you've got quite a ways to go to, number one, either get steel below the green, to tell you that this isn't going to last, or getting the green back all the way above cyan, and that could take some work as well. So no need to get jumpy about wanting to attack it to the long side just yet. It's not quite there. USO, obviously we had the buy candle, boom, crossed over as well as moved above. Not a surprise on the little commodity moves right there. Bonds obviously took off in the news that a little bit of tightening potential, and Treasury scatter. Yeah, it's overbought. But needless to say, it was a nice spider that developed within there, and the huge move with steel all the way back above here should have some carry through. That corresponded to our wanting to be long gold from 125 and above. Actually, it was 124 or whatever, but right around that close there. So the dip down. It was a beautiful move, and it just kept going. The deep red here, and you got a new bifractal. Target of 128.73. It's going to be interesting because you're going to need to see the green move up pretty strong here to get past the steel. Otherwise, we'll be looking for retracing that not too distant future. And euro, of course, doing nothing with that because that actually helps the euro, that the dollar is going to get a little support. Now, is it premature to suggest that, the Fed is going to tighten? Yeah, a little bit of its rhetoric, I think, just to calm things down a little bit and create a little equilibrium. just until things stabilize a little bit more and they know exactly what they're going to do. So you might hear them talking out of both sides. I mentioned on the Skype chat we were talking about, attack one sector here, see how much of a move you get from the reaction. As long as people don't react to it like I expected they might, a little bit of an overreaction where you then get major decline in, any given index on a day. And if that starts to become a confidence issue, then the Fed's going to have a real problem and they're going to have to back down from that and maintain their liquidity stance. Otherwise, you can see much deeper declines through it. So X held up just fine within this. I mean, it's been in the safety zone with this. We didn't expect any real problems, so it did fine within the weakness of the day. WLT. Nothing special. It crossed above with the cyan. We always know that leads to weakness. It actually held up pretty decent given that. So it could be a little potential buy in there shortly. Likewise with CLF, we had the positive extremes, expected it to come down to retrace those. Held up pretty decent overall. Now it got oversold, so turnaround on there could be attractive from a more substantial play. Let's take a look at some of these. Apple really wasn't too big a concern, didn't really have too big an impact from it, but you did get the steel cyan popping above red, white, as well as all the green. You still a little bit in the safety zone, so don't expect it to be too dramatic, but needless to say, everything converged right against it. Hardly impacted given what we've seen from everything else. No issues there with Amazon. It's tiny. Baidu was a little bit more problematic from the deep red that had shown up earlier, and still not a bad opportunity to be able to jump into with cyan moving lower. Green still leads the case, so I would be looking for these retraces as a support mechanism. We knew the FAS was the ultimate, and of course any tightening is going to make interest rates a little bit more expensive, which is always problematic for banks because of the split thing. One, they can earn more, but two, they worry about the default increases, and obviously that's going to have an impact. And sure enough, deep red starts with that move straight up. Hasn't dipped below the red line. We expected it to, like we talked about just in the morning, retracing back down to the dip here. And it's funny how these things do it. I had some questions on StockTwits about Google. I expected 0 to nothing from it. This configuration was just weakness. It wasn't, you still had the green above, so it was modestly bullish to that extent, but it was fading, and I was just, you're not going to get much of a move. So it was one of those where someone trying to play for options that was going to get burned on premium. It was only if you own the stock could you, I said sell time, which means covered call or anything where you're selling the option as opposed to paying for it. Netflix, we had already seen the weakness in there. Nothing new with that. PCLN, we had been calling for a little bit of weakness throughout the time on this move, and when it didn't make the green pivot above, that was trouble sign again, and sure enough, exacerbated that a little bit to the downside. Again, that's all pretty straightforward from what we were seeing. We continued weakness from Tesla with the deep red. Sure, we had the green cross above, but again, very soft in this move with red just making a first pivot. So now it's got the opportunity where if that red can pivot above, then you would have something. We didn't get that breakthrough that we were looking for with the red where cyan dips below. And now you're looking at the potential for steel dipping below there, which would certainly create more of a dip. All we were talking about, though, was coming back down to the lows right here. Just did that. I know some people say, oh, you get so nonchalant about these things. Well, because they're pretty straightforward for us. It's nothing unique, and you just have to back off when you know things are getting soft, and you can be aggressive when it becomes a clear sign. This actually looks better for Twitter. Formula line, you still have a decent separation there, but slight improvement in the extreme histogram next day. Looks attractive. You still have the red heading on a pretty steep decline. What you really want to see is the steel pick up right here and move above cyan, and that would be the clear indication that you're going to get a runaway to the upside on that. So for now, it's pretty flat overall. That's where we're at. Nothing too dramatic. Yes, we may expect some more weakness, but it's only going to set us up for a better play. So we'll just wait for it to develop as it takes place. Continue to look for me, though, on the StockTwits private Twitter feed. Trade well.